This is Tiffy, and today I wanted to explain why I like the Canberra market so much. It has a lot to do with the performance we've seen over the years, considering that I love cash flow. So let's talk about what's been happening and what we're seeing in the Canberra market. So Canberra is a very unique type of city where most of its employment, around 70% of the employment, is related to government. And government keeps growing over time and has really high paying salaries. So not only that, but it's been quite a few years since Canberra has seen shortage in supply, which means that combined high salaries with housing shortage means that Canberra sees outstanding rental incomes, right? It has the highest rents in the entire country. So what I'm showing on screen is for units in particular, just because I do like units in Canberra a lot. Right now, the price gap between units and houses is massive. And units on average rent at $540 per week, which is higher than Sydney, Melbourne, and Brisbane. Okay, so that gives us really good rental returns. The rent in the last year in Canberra has grown 10%. So I hear a lot the whole spiel about I don't like apartments. Do they grow as much in value or rental income? And they actually do. They grow not just in value but also rental income. In Canberra has performed super strong, growing double digits in the last 12 months. Vacancy rates are really low, right? So I understand how borders have been closed, and in big cities like Sydney or Melbourne, you get a lot of students and short-term visa holders staying in apartments closer to the CBD, and that's why with borders closed, the rental income of units in those bigger cities has suffered a bit. But that has not been the case in Canberra. Really low vacancy rates. This is like 1 week a year almost, like it's not much. Now, when we combine affordability with strong rental income, we get some great gross yields, and the rental returns are fantastic when we're considering how much properties appreciate over time combined with that rental income, which could be monthly or annual rental income. Now, let me talk today about two specific areas that I really enjoy in Canberra. I'm going to be speaking about a place called Belconnen, if you can see where I'm pointing in the screen, and Phillip. Those two areas I really like, and they share a lot of similarities. Now, one of the big infrastructure projects coming to Canberra is the light rail. Stage one has already completed, connecting Gangalen with the CBD. Now, Belconnen and Phillip will bring future light rail stations also connecting to the CBD. So you have that infrastructure and connectivity coming into the area in the next few years. On top of that, both Belconnen and Phillip have Westfields, have universities and hospitals. So they are considered employment hubs. Let me put some zoom in to Belconnen. Now, Belconnen, we have the Calvary Public Hospital, and there's a private hospital as well. And we have the University of Canberra. And here in yellow, you can see the actual Westfield site. Okay. On top of that, Belconnen has the lovely Lake Ginninderra, so that's also a plus. Now, if I scroll a bit down to Phillip, in Phillip, again, we have the Westfield, we have the Canberra Hospital, we have the Canberra Institute of Technology in the area. So there's quite a lot happening, okay? And when we look at it, here we have Parliament House, but the CBD is close to Bradon. And if we want to sort of understand how long it would take us to commute from both Belconnen and Phillip into that CBD, is around like a 12-minute drive. So everything's pretty close by. And yeah, it's actually really good. Now, one thing that I should have opened, I'm sorry, before recording this video. So this is just an example of a cash flow. It's a 2-bedroom two bathrooms, and in particular, this unit had two car spots. That's not common when you're going for a two-bedroom unit. And the pricing was in the, let's say, higher pricing. So for a two-bedder, we would see a range of like that 500 to 650K. This one was a two-bedroom plus study. That's why it was 100 square meters internal, like a considerable larger size type of unit. And we could easily rent it out for $580 per week. Going, it was the rental income would range in that 580 to 620. So I'm more of a pessimistic, realistic type of person when I play my math. So for this, let's call it 640K purchase price. When we look at purchase costs, we're considering the stamp duty, the transfer of title, and our solicitors will be slightly below the $2,000 mark. However, settlement day comes and there's usually some like last minute costs. So that's why we pay a $2,500 for conveyancing costs. So all in all, our like total out of pocket to complete the transaction or purchase costs is around 20,353. And if we decide in this case to put a 10% deposit, we're looking at 10% plus purchase costs, all adding up to $84,343. Now, a few assumptions I've taken. Again, I'm going to repeat these. I'm a pessimist. So over long periods of time, Canberra grows on that 4 to 6% average year on year. Last year, it's been like 22-23% growth. So I'm trying to play it down and be quite realistic over a market cycle of 7 to 10 years. This 4% capital growth rate is what drives the price of property up over time. And for that rental income, we've seen that the average vacancy rates are really, really low right now. So I've played a 2% vacancy rate. Another assumption I've taken is that the interest rate is 3%. And when I look at rental expenses, the standard agent's commission in Australia is around that 5.5%. Usually we pay a 1 week rental income as letting fees. This means that the property manager will be showing our property to rent it out, and that's what we get charged. Water and council rates of approximately $2,000 a year. Because this is an apartment, I'm not considering building insurance. The building insurance will actually be covered by body corporate or strata fees, but I am assuming I'm going to be paying landlord's insurance, which would cover, like in case something happens to that apartment, the insurance could pay me the rental income. Okay, so that's what landlord's insurance will cover me for. It's a brand new property, won't assume there's going to be much maintenance to do, but all in all, I always assume like $500 per year of maintenance, and body corporate around $2,400 a year for this unit. So all of my rental expenses in a full year come to around that $7,506 amount. So if I look about at my income, already assuming that 2% vacancy rate, I'm generating $29,557 in income, where the interest is around $17,540, and all of my rental expenses are $7,506. So I'm getting a positive cash flow of $4,500. This is before I go and do my tax return, and assuming I've only put a 10% deposit. Okay, so it's very positive for only a 10% deposit. Now, I can claim depreciation of the building the first 40 years and depreciation of fixtures and fittings the first 10 years of this property. This is a brand new property. Because I'm only putting a 10% deposit and requesting the bank a 90% loan, I also have lender's mortgage insurance, LMI, which is tax deductible as well. So here I have the depreciation and the LMI components, which they're called non-cash deductions. Reason being, they're not coming out of my bank account over the years. But the ATO allows us to claim it as an expense. So we had the cash deductions, which are our interest and all of our expenses, and the non-cash deductions. So when I add up the cash deductions and non-cash deductions, they all add up to 38,000. So I had a rental income of $29,557, and the ATO sees that my expenses or total deductions come to 38K. So even if my income is positive, they're seeing as if I were making a loss. In this particular case, I was assuming a very high income. So let's assume the gross annual income of a person is 100K. So for an 100K gross income, the ATO would give you back when you do your tax return around $3,600. Okay, so if I add up my pre-tax cash flow of 4,511 with what the ATO will give me back, that is around $8,000 positive cash flow in a year, which if I'm looking at it in a per week income, it's around $150 in income per week. Okay. And just be sure to understand that anything between brackets is actual income. So very strong cash flow. Hope this all makes sense. And if you have any questions, don't hesitate to ask me or any of the investment specialists at Wealthi. Have a good one.